Okay, you should have already completed the review, and I will just go over it with you to make sure you get the right answers. All right, to start with, selected accounts from Centerville Supply unadjusted trial balance of the current year are shown on the next page. And again, you probably found those. They are right there. Use the following adjustment information to journalize adjustments on page 15 of the journal below. So we're going to use page 15 down below. Okay, next, the estimated allowance or uncollectible account receivable is $32,000. If you look at the amount from the sheet, it is $314.95 on your unadjusted trial balance. So we're going to take the amount here minus the amount that's on your unadjusted trial balance of $314.95, and we come up with $2,885.05. And so that'll be the adjustments that we need to bring our accounts up to date. We'll go down to our journal. We'll write the words adjusting entries. The date is December 31st. Uncollectible accounts expense, $2,885.05. Allowance for uncollectible accounts will be credited for the same amount. Our next is merchandise inventory. The inventory at the end of the fiscal period, $198,415. If you look at our unadjusted trial balance, it is a little bit lower, so we will figure out the difference between the two. So we'll take minus $194,171.94 from our unadjusted trial balance, and we will come up with a difference of $4,243.06, and you can see that it has gone up from our unadjusted trial balance, so our merchandise inventory has to go up. The 31st, merchandise inventory, we said it was going to go up. It's an asset, so we have to debit it. And income summary will be credited. Our next one is office supplies inventory, $1,248. If you look at our supply inventory from our unadjusted balance, it's over $5,000. So you can see that your office supplies has gone down. We have the balance of $5,414.19 from our unadjusted trial balance. It goes down to $1,248, so the difference is $4,166.69. So your supplies has gone down by that amount. The adjustment we need to make then, 31st, supplies expense for our office equipment, for our office supplies, is going to go down, or it's going to go up, sorry about that. And our supplies for our office is going down. So this amount makes it go down, and that is up. And that's the same thing here. We have this going up. All right, our next one then is the value of our prepaid insurance premium. It's now worth $2,000. On our unadjusted trial balance, it is $14,000. So it is going to go down by quite a bit. So we have $14,000 minus that, and we'll come up with an adjustment of $12,000. So our insurance has gone down by $12,000. Okay, our adjustment then, it's the 31st. Insurance expense is going up by $12,000. Prepaid insurance is going down by $12,000. So again, this $12,000 will make it go up, our insurance, and our prepaid insurance is going down. The next one is notes receivable, 90-day 8% note dated November 16th, 84,000. So again, we need to figure out how many days we need to collect. November, we have 30 days in November. It was made the 16th, so we have 14 days there. And then December, we have 31. So if you add those two together, we have 45 days. We take, to figure out our interest, we take the 8,400 times 8% times the days, 45 days divided by 360. And we come up with an interest of $84 that we have to collect for this fiscal period. So our adjustment, the date is the 31st, interest receivable, $84, interest income, $84. And again, receivable, that is a asset, so this is making this go up. Our interest income is a source of revenue, and that is also going up. The next one is the estimate of office equipment depreciation, $9,350, and that is the amount of our depreciation. We don't have to do anything with that number except record it as our adjustment. So we have depreciation expense for office equipment, accumulated depreciation for office equipment. And again, both of those numbers, this is an expense we're debiting, that's going up, and that is going up because it's a contra asset. Okay, our next one then is the net income before federal taxes is determined at $185,232.16. Use the tax table to calculate federal income tax expense and journalize the adjustment. So we need to go to this table. The amount of our net income before income tax is $185,232.16. We will be using this information right here because it falls between those two numbers. So for our first 100,000, we are taxed right there. So for our first 100,000 is $22,250. Then we need to figure out how much it is beyond the 100,000. So the amount beyond 100,000, that's pretty easy to figure out, is $85,232.16. That is taxed at 39%. And we would come up with $33,240.39. Oops. And 54 cents. So we add that over here to our first 100,000. We had 22,250. The next $85,232.16, we will be taxed at $33,240.54. So our total will be $55,490.54, and that's the amount that we owe in taxes. Again, if you look down here, we will see that we have already paid $50,000 in taxes. So we're going to take out $50,000 that we've already paid in quarterly payments, and we'll see that we owe $5,490.54. And that is the amount of our adjustment. So we'll go back to our adjustment. 31st, federal income tax expense has to go up by the amount that we owe, the difference, $5,490.54. And our federal income tax payable, the amount that we have to write out to the government, is for the same amount. So again, remember this is going up and our payable is also going up.